Great morning, fellow traders. This is Austin. It is Friday, July 11th, end of the week. It is 8:05 Eastern. Got a crude oil trade going here. Generally, I trade crude oil in the pit session from 9 a.m. to 2:30. Occasionally, I'll trade it earlier or later. I happened to be at the charts this morning for some various other things, and we had a key sell sequence confirm. It's actually a congestive pullback. This is a pullback trade here, and I'm short a couple of contracts at 102.57, and the initial stop was 102.62. You can see that happened just 5 minutes ago, and then they've worked their way lower enough so that I'm trailed to plus one tick, plus 1 cent, and that's how it goes. And like I said in the blog post recently, I'd been focusing on the Russell, which of all instruments is my preferred. At least it had been in the past for a number of reasons. But it's got to the point where true liquidity, the ability to fill however many contracts are possible and control risk by limited slippage is just outside of my acceptable parameters. In other words, if you're trading the Russell, you can't fill more than a couple of contracts without partial fills, and even one contract can slip 5 to 10 ticks or so. It's just gotten crazy. So with that in mind, I went back and revisited crude oil, which I've traded a lot, in which I enjoy trading. I'm probably like trading crude oil more than anything else except the Russell of old. Okay, but the Russell of old is not here anymore, and quite frankly, crude is not the crude of old. There was a time when it would average 200 or 300 cents per day. A lot of, more often than not, there was real range expansion, real volatility, real serious movement. Now, a good normal average crude oil session is going to be about 100 to 120 cents. High to low, which is $1,000 to $1,200 a contract. That's a lot of distance relative to anything else. But most importantly, it will make 2 or 3 or 4 price oscillations in a session, and that's the key. The key is price making moves, whether it's a trend session and it's giving you pullbacks, against the trend and then continuing, which gives you a chance to either trade that, counter trend oscillation and or trade the next leg in the trend, or both. That's important. The way stocks are lately, they trade they trade straight. They're either going straight sideways or they're going straight up or straight down. And that's difficult to get more than one entry out of. If the market's going straight up, many times it'll just give you one entry, and then you're waiting for a pullback, or you're waiting for a correction or something to happen, and it doesn't. It just keeps leaking, up or leaking down, and there's no continuation signal, and there's nothing else. So with that in mind, crude oil is more opportune. That said, in my opinion, it is suitable for traders with experience only. A new beginning trader, in my opinion, who tries to get started with crude is going to be frustrated greatly, because it just, the way it behaves, it moves at speeds that are breakneck at times. It is, in my opinion, more suitable for breakout than pullback trading and things like that. So, yeah, like anything else, it requires the utmost of patience and discipline and mental fortitude and all of those things. But no one ever said trading in general is easy. So in any event, I'll just go ahead and chronicle today. I don't know if it's going to end up in a net loss or net profit by the time we're done, but we'll see how it goes. 8:09 Eastern. Okay, quick update. It is 8:56. We're just about to hit the pit session open here. Price has hung up in this general area. Let me find my mouse. Price is hung up in this congestion zone here, and then it broke free. And there was some key congestion or support right around 1240, which is visible here. Right, you can see where price reacted to both sides. Prior support, now resistance. Price is coming down. It shouldn't violate that. It should not come much above 102.40 if price is going lower. So what I'm going to do is move this down to 42. All right, so I'm gonna put a 15-cent positive trailed stop, because if price comes back up into this area there, then further downside is probably negated. And it also happens to be at a initial targeted support. So if you're taking our trades and you're looking at the charts we do, you're going to see that the 102.20 mark is a key magnet, and price went down there and tagged. The next one is 102.8, and so that's about where I'd be looking to cover, somewhere around 102.7 for 40 cents or lower than that. Hopefully the 102 area. So in other words, I'm targeting 40-50 cents minimum from this trade. It'd be great if it just smashed down and went 100 cents, but we'll see what happens. So when the pit session opens, they're going to start whipping them around. Now I'm going to, the pit's about to open, so I'm going to trail this to plus 21 cents. And that's just a dollar stop. If they come up and take it out, then this was a 20-cent freebie in the pre-market, and then we'll work the actual pit session. And if they dive lower, I'm looking to get 40-50 cents out of it, and that would end my day. Anywhere I can pick off 40-50 cents, I'm going to be content with. So there we go. It is 8:58. Okay, it's 9:01, almost 9:02. Pit session's open. They're sneaking them lower, and I'm going to likewise take the stop lower. I'm going to put
order
a
pending.
new one in before I take the old one out.
Order
because,
canceled.
Worst case scenarios, there would be no stop in the market. So that's what I always do in what could be fast market conditions. You never know. Especially with crude oil, you go to move something and it'll make an explosive move. So I would rather have, let's say I'm short, and I'd rather have this buy stop taken out and then price fly up and hit the other buy stop. I'll deal with that, because I've already booked gains, and there you are, rather than have no stop in, the market's flying up against, and then you're naked and exposed. So that's one thing I do with crude religiously. If I'm going to move a stop, I will just put a fresh one in, and then I will erase the existing one, rather than try to move the existing one into live fire, because if you've traded crude, you know that it can be violent in its price movement. The next thing I'm trying to do is get the stop down to about 102.17-16 area for that 40 cents, and then go from there. Right, or the first 5 minutes of trading from 9 to 9:05 can be very whippy when they're first establishing things. So worst case scenario, there's 31 cents here marked, and allowing for slippage. Best case scenario, we're going to get 40 or better. So see how it goes. 9:03, and here we go.
Order
Same
pending.
story.
Order
Stop,
canceled.
remove the old one. Now there's 40 cents locked in. See if they'll let us go to 50, or if this is it. I'm doing my best to preserve time here, keep this adder under 15
Order
minutes.
filled.
There we go. So that got tagged out on the mark, and that was a successful sequence, plus 40 cents. Now I could be done for the day at 9:05 if I chose to. I've already hit the minimum daily objective, and that would be that, or I could continue to trade further. We'll see. I don't know what I'm going to do. I'm not inclined to. If I see a setup that is too compelling to pass up, then I may trade further, but if not, it's a successful day. So there we go. Hope this helps. See you next time, and as always, best trading wishes.